Welcome to Real Estate Investing for Professional Men and Women, the podcast that guides professionals to financial prosperity. Join our community and let's start building your wealth. Here's your host, Gary Wilson.
Hello, everyone. This is Gary Wilson, and welcome to this week's Real Estate Investing for Professional Men and Women, the podcast for you. Typically, you're engineer, pilot, military, teacher, orthodontist, chiropractor, the list goes on, usually professional and often business owners. And the reason this is important is you'll notice in the world of real estate investing, people who treat it and run it like a business always do better. So if you don't have a business, you may want to start one. So in any case, if you haven't subscribed yet, go ahead and do so. This is on 30 some odd different channels, downloaded in 30 some odd different countries. And you can subscribe to it. Also, you can go to myinvestmentservices.com and click on the members area. And there's a community site we have there we've been working on for the last 5 years, and there's several thousand strong investors just like you and I. And more importantly, we have a lot of agents we've trained. We call them investor agents. This is in the residential world, and we have commercial world too, which we'll talk about here in a second. But always, if you're in the residential world, 4 units or less, always look for a certified investor agent. There's only one place they can get that certification. We train them. We train them to work with us investors. So in any case, today's subject, though, is going to be a little bit more on the commercial end of things. So I've got a special guest, David Bradley. Dave and I go back probably at least 10 years now. We used to work together in Pittsburgh at a brokerage company I had before we did a big merger. So in any case, say, David, welcome aboard, man. I appreciate you taking your precious time to share your wisdom with these folks.
Absolutely. I appreciate the opportunity to speak to everybody. And hopefully I can have a word or two that offers some value.
Yeah, we have. Well, the good news is we know each other personally, so I know you got a lot of valuable experience, and you've had a great success in the world of commercial management, commercial brokerage office, one of the largest investment commercial brokerages in the world. But it's Marcus Millichap for everybody listening. So David, if you wouldn't mind, kind of take us back when you first got started. I know you're from Western Pennsylvania, went to Penn State. But tell us about those years and how you actually got into commercial real estate, and kind of paint a picture, and then how you got to where you are today. And then maybe we can talk about a couple of examples,
Sure. Thanks. So my path into real estate kind of started being that I had no idea what I wanted to do with myself. It actually started while I was in college. You mentioned that I went to Penn State. Didn't grow up in a real estate family. Both my parents are teachers. Real estate was kind of the furthest thing from the dinner conversation in the evening. But while I was in college, I was, like a lot of people, I think that at that stage are just trying to figure themselves out and what they wanted to do. And I happened to read a book that I came across one day at a bookstore called Rich Dad, Poor Dad, which I think a lot of people are inspired into real estate from that book. And the whole concept just made total sense to me. Buy a property, have somebody rent it from you, use the proceeds to pay your mortgage and expenses, make a cash flow from it, accumulate equity. It just kind of clicked with me as this is what I need to do. Why doesn't everybody do this? Was kind of my feeling whenever I first got into it. So devoured everything that I could from understanding, learning about real estate. I ended up getting a job. First job out of school was with Marcus Millichap, which is the company that I work for now. I run our office here in downtown Chicago. But my first opportunity was as an intern in our Florida office in Fort Lauderdale, and that was back in 2003. So Florida real estate in the early 2000s, all the way up until the downturn, was absolutely going crazy. I kind of had a very typical experience getting into the business from a brokerage perspective. Worked really hard, made a bunch of phone calls, talked to as many people as I could, and over time I built up a good brokerage practice selling apartment buildings in Hollywood, Florida, and North Miami. And during that time frame, I think my initial goal whenever I got into real estate was to accumulate a portfolio of passive income type of investments to create financial freedom for myself. what I found is that I really had a passion for, teaching and coaching other people. So I ended up building a team of agents, and then I transitioned into a management role within my firm, which is essentially what I do. I teach people, I coach people, I grow people into the business from an advisory standpoint. Helped to run a couple of offices in Florida, and I met my wife while I was down in Florida, who ironically is also from Pittsburgh. And whenever we got married, we decided that we wanted to move back home, be close to our family, and start our own family. And that's when I got Gary and I. That's whenever you and I met. Was right at that time. Whenever I moved back, I really had that itch to be entrepreneurial and really, start building out the real estate portfolio. So, as I was working with Gary and, building out the brokerage business and so forth, I was also starting to buy investment properties, buying single family homes and small apartment buildings. Did some syndicated deals where I was raising some money and pooling investors together and buying different properties. And it was a lot of fun. Loved it. Loved building it. What I didn't really have a taste for so much was all of the things that go along with single family properties. There's management oversight and some of the headache frozen pipes and clogged toilets and some of the things that you don't necessarily think about whenever you first get into the business. All you see is passive income, and you think everybody's going to pay their rent, on time every month, which isn't always the case. But did that for a few years and had a great time doing it. And then eventually found my way back to Marcus and Millichap, this time in our DC office, where I came back in DC, and I moved my family to Richmond, Virginia. I opened an office in Richmond for the company, opened an office in the Hampton Roads, Virginia. And then about a year later, the Chicago opportunity opened up. It's a huge market. There's massive opportunity here in the Midwest and in Chicago specifically. So moved out here about 3 years ago, and been here ever since.
Wow, well, that's quite a journey. And it's interesting as our paths crossed again down in Tidewater. That's right. That's where I was from originally. And I know it was intriguing to think about setting up a brokerage office. The time I was still a different brokerage office company, but I love what Marcus Millichap stands for. I mean, it's really all about helping people just like me and a lot of folks listening break into the apartment buildings, going from the single families and duplexes into the bigger properties. And it's really, a lot of it's psychological. The barriers are really, it's all in our heads. The formulas are the same. There's more details, of course, but in fact, if you wouldn't mind, maybe talk about maybe one of your early deals that you worked on and what that was like. And, like now the things you're working on now, I'm sure it runs the gamut. Chicago's a huge area. You got, smaller stuff all the way up to the biggest of the big. But take us back to the beginning and maybe walk us through a deal. So all those folks listening, if that's where they are, that'll kind of resonate with them. And then maybe we can talk about a bigger one too, and talk about timing and things like that too, and eventually. So,
Sure.
If you wouldn't mind, take us back and go down memory lane on one of your deals,
Sure. So, I could tell a lot of different deal stories, both with clients that we've worked with and people that have kind of played Monopoly. They sell their 4 greenhouses and go buy a red hotel and kind of climb up the property ladder. I'll tell you from my experience, the first deal that I ever bought was a single family house. It was a small 3-bedroom, 1-bath. It was in decent condition. I got it at a pretty good price. I think I paid $20,000 or so. I don't remember the exact figure. It rented out for $625 a month. It took me a long time to finally pull the trigger. I mean, I looked at it from 100 different ways. What's the potential upside? What would be the exit value if I sold it? If I improved it a little bit, what's the downside? What if they stop paying rent? How much is my overhead going to look like? So it took time to kind of get the confidence to go ahead and pull the trigger. And what ended up happening is after I got that first one, got it set up, things were moving forward, checks were coming in, and all of a sudden I said, that's pretty easy. That was a lot easier than what I thought that it was being. And back to your initial point, a lot of times it's that those mental barriers that you put upon yourself that stand in your way. But you got to start somewhere, right? So we did that, and then I ended up acquiring a few more houses like that. One of the deals that stands out was a portfolio that I ended up purchasing of small apartment buildings, some single families. Gary, you were involved in that transaction as well. I think I bought them from you, and that was kind of a cool experience because as I was looking at it, what I found or what I observed was that there was a lot of people that wanted to be in real estate, in investment real estate. A lot of times, especially professional people that have other jobs and other responsibilities, that whole idea of management, oversight of the tenants and some of the things that are challenging to owning rental properties like that. They're looking for a little bit more of a passive way to invest and earn a decent return on their money. And that's whenever I went into formed a limited partnership and, went with a number of other investors into a deal to buy a bigger package of properties. And it ended up turning out, it was a good deal. The cash flow was right. Tenants were in place. Properties were in good condition, and it made all the sense in the world. So, the only difference between that first one and the second one was just, the confidence that it would turn out and the ability to know that you can handle some of the issues as they arise.
Yeah, we call it stretching the risk threshold or your risk muscle. It's like, there's an old saying, people who have, big portfolios and have a lot of success, it's not that they don't have problems, they actually have bigger problems, but you condition yourself to handle those as you grow and develop as a person. And you can read all the books in the world, and I'm a huge reader. I mean, I've got a library of over 3,000 books and constantly training and joining masterminds, but it's the doing part that's where we learn. So you actually got to get out and do it, because then you develop that intuitive level knowledge, and it's a human relations business, and everybody should understand it's, when you're providing housing, I mean, it's between food, shelter, housing, you're covering 1/3 of it for these folks, and stuff's going to happen. They're going to, people get jobs, they lose jobs, they're born, they die, they get married, they get divorced, stuff, happens. So it's not all bad, and some of it's good, but for life circumstances change, and you're inevitably drawn into that human, it's like a human relations business. And so the biggest challenge I see for a lot of people when they're first starting out is they have this like a duality. Am I going to be a good business person, or am I going to be a compassionate human being? Well, the answer is yes. And that sounds confusing, but the answer is yeah. You can be both, and it's a case by case basis. I wish I could tell everybody there's a formula to follow, and there's rules to follow, but really every case is different, and you just got to look for the opportunity to serve and prosper. We call it prosperity through service. You serve first, prosperity will come. Sometimes I think like all those refugee families we brought in, first was a little bit, concerning. We didn't really know what we're getting into, but we did it. And at the end, we started measuring results. It turns out over time, they became some of our better tenants. It was like it wouldn't cross their mind to not pay rent. It'd be like a violation of the family laws. It just, and a lot of Americans, though, that was the first thing they thought of was, I can't pay this. I'm not going to pay it. But it ended up being starting off as a way to serve, ended up being a way to prosper too. I guess that's the kind of what I'm getting at. And yeah. If you're anything like me, listening to good advice is helpful and inspiring at the same time. but having a reference guide at your fingertips is invaluable when I sit down to do serious planning. That's why if you go to the website, myinvestorservices.com, at the very top of the page, actually sort of near the middle, you'll see 5 different guides on 5 different aspects of real estate. All these are free, and all of them can help you impact your bottom line. Just check it out. Go to myinvestorservices.com, right smack in the middle, click on any one you want, or all 5 if you want.
You're hitting the nail on the head. I've had the opportunity since being in Chicago to get to know some of the some of the heavy hitters in real estate in the country, in the world. People that are doing the high-rise projects right inside the loop in downtown and so forth, and some really, really interesting things that they're doing. I mean, kind of on the cutting edge of what's happening in the real estate world in terms of consumer preferences and the things that people want to be doing. But if you talk to any of them, and the real visionaries and the ones that are doing big things, they all come from that exact perspective. What you're talking about, they start with the end in mind. It's who am I serving? Who's going to be impacted? How are they going to be impacted? How can I put something together that is going to make their life better, their living situation better, their work environment better? How can I be, being of more service through the work that I do, being a visionary in real estate and imagining something that isn't there right now and creating that something, but it obviously the numbers have to make sense. They got to back into the does it pencil out? Can you make a profit? Can you does it make sound business decision? But I think leading with that kind of, I guess call it a heart-centered approach, or the impact approach, servant approach, is probably, if I were to look at it, the number one defining characteristic of those people that, there's a lot of people that are successful. Some of them may or may not be, coming from that place, but the people that are at the top, they all have that mindset. So I think that's a really, really important point.
Yeah, I appreciate it. It's one of those things like I started off thinking, well, I'm just wanted some passive income. Like you said, the same, that's how we all start off. But as I grew, I realized, and everybody I've met said the same thing you just said, that the longer you stay with it, the higher you go. You kind of evolve to that philosophy, and you have to. It's a natural thing to develop. So it's not anything anybody should worry about. It's just going to happen automatically if you stay with it. But hey, speaking of Chicago and the bigger projects, so what kind of things are you seeing now? Like what kind of deals are coming through the office there, and what are the guys working on? Anything related to like Opportunity Zone? Where you're seeing some of the emphasis right now where people are investing in the Chicago area?
Sure. So I'll answer that probably in a few different ways. So our firm, we cover all the major product types. So we do a lot of apartment buildings. We do office buildings. We sell shopping centers. We self-storage facilities, hotels, senior housing projects. We do a lot of that business. Basically, if it's got an income stream attached to it, that's in the wheelhouse of the type of business and the type of client that we're working with. So there's a lot of dynamics that are at play right now. I think the number one kind of factor that influences all of commercial real estate is job creation. If people have jobs, there's more households that form. When more households form, that means that people are moving out of their parents' house and getting an apartment. And people that are roommates, they have enough money, they can go get their own place. And then that also spurs the consumer spending. So more restaurants and shops open up, so the retail facilities do well. People accumulate more stuff and they need to put it in storage, so self-storage does well. And then you have more people that are willing to travel, so hotels do well. And then you have more businesses that are expanding, so office space tends to do well. So all of those things are really important. So the fact that we've been in a essentially an upward trending economy for the better part of the last decade, coming out of the downturn, depths of the downturn, 08, 09, there's been steady job creation across the board. The other factor then that's coming into play is that you've got the millennial generation, which is a huge, there's two huge population bulges in the overall demographic across the country. You've got the baby boomers, and then you've got the millennials. The millennials have changed a lot of how people are looking at things. They're choosing to stay renters a lot longer than what they have in the past. They're choosing to get married later on in life. They choose to sacrifice space for convenience, meaning, they're not really looking for a 4,000 square foot house as much as they're interested in having access to restaurant and gym and, areas to hang out and things like that. So what we're seeing then across the board is there's a lot of interest in multifamily, in apartment buildings, because there's demand for it. And we've seen some pretty steady rental growth across the board in really most cities. And Chicago is one of those places. We've also seen a lot of people coming into Chicago from other parts of the country. So a lot of capital moving across state lines, particularly from the coast. So if you look at San Francisco as a Bay Area of California, extremely high property values, high barrier to entry. Your yield on from a cash flow standpoint on a small apartment building is going to be a fraction of what the yield is that you can get on a building here in Chicago. So we're seeing a lot of that money that's coming. Your dollar goes further is really the big thing. So that's kind of a trend that we're seeing out there in all asset classes. The other thing that's also kind of interesting, I mentioned the baby boomers, getting into retirement age and so forth. What's going to happen over the next 10 or 20 years is what amounts to the biggest transfer of wealth ever in the history of the world. So all of the baby boomers have accumulated a lot, more than any other generation. And whenever they pass, all of that's going to be transferred down to their heirs. So people as a whole, the country, people are becoming more educated about real estate. They view it as a viable asset class, whereas 30 years ago, 40 years ago, it was really, you put it in stocks and bonds and you had your pension and that's how you retired. And now real estate being looked at as a viable and something that people can get into. So it's, as that transfer occurs and you've got people that are open to different ways of doing business, internet has changed things, all the technology that's out there. It's now, we have the ability to manage properties remotely in a way that we couldn't do even 10 years ago. So, there are systems that are out there now. You buy a 10-unit apartment building, let's say, you can get a Ring doorbell with a camera and see the property. You can get sensors on all of the mechanical equipment that you've got, your furnace, your electrical systems, your fire, your everything. So really, you can in real time manage your property from your smartphone, even if you're on the other side of the planet. As long as you've got, the ability to call a contractor or call a handyman to be able to get into your unit to service your unit, you're going to be able to do those sorts of things. So what that means is the combination of the wealth that is out there that is going to be chasing real estate and is chasing real estate, combined with a lot of the technologies that are available and are going to continue coming available to make it easier for people to manage remotely. I think it's just all good news for us. It's just basic supply and demand. There's a limited amount of real estate. There's more demand that's coming. There's more accessibility that's coming for people to be able to access these things. And, ultimately, I think that's going to mean good things for property values over the long term. I mean, there's short-term things that'll influence it. Interest rates go up or down. You've got geopolitical concerns out there all over the place. You've got, different taxing policies and things like that have an impact. But, the big picture macro level trends and forces that are at work, put real estate really in the crosshairs, I think, of probably the best place to be putting your money over the next, 20, 30, 40 years.
Yeah, I agree. nothing against the stock market. I mean, I still invest in the stock market, but the reality is my wealth is made in real estate, and I maintain it by, investing in really safe conservative mutual funds. That's sort of my parking place. But really, real estate, a lot of people have these limited beliefs. Well, you can't get your money out. Like, I've never had that problem. you got to structure things correctly, but there's more that you got to know. But you can absolutely, open up a line of credit that if you don't use, you don't pay for it, but it's there if you need it. Based on the equity in your properties, things like that. We've done blanket mortgages. There's all kinds of creative things you can do, bridge loans. So, but I appreciate everything you were saying about Chicago. And I do agree. In fact, I know Canadians that also invest in Chicago. It's an easy.
Very much. Yep.
Yeah, it's amazing the number of Canadians investing in the area there. And if you look at Chicago, you obviously got the big city, but within like a 45-minute drive, you got all these other, secondary and tertiary towns. I mean, what's the one west north? Rockville. Rockford. Thank you. Great area. So there's a lot of possibilities for people out there. 2 major airports. You go down around the bottom of the lake, you head towards Gary, Indiana. Gary, Indiana, has some challenges, but it's very affordable. It's very inexpensive.
Yep.
So, in any case, I'll tell you what. Does Marcus Millichap have anything for the public? Like, I think when I first mentioned, there was some reporting that came out that they made available to the public. I guess reporting on the industry that people listening can get their hands on and maybe see what's happening trend wise, data wise, macro, and maybe specifically on the Chicago area. Anything online they can tap into or publication wise they can get?
Sure. Absolutely. If you look at, what our firm, what we do, I mean, our mission statement is to create and preserve the wealth of the clients that we serve. So we do that really in 4 main areas. We broker deals, match buyers and sellers for properties like I've been describing. We also have, we're one of the largest commercial real estate loan originators in the country as well. So we do a lot of debt financing and equity raises and things along those lines. But then on the more of the information side and advisory side, we have a huge research division. One of the biggest in the country from a brokerage standpoint. So if you go onto our website, and our website www.marcusmillichap.com, there's we're putting out upwards of 12 to 1,500 specific research reports every single year, and some of those reports are very, very granular in nature, down to small submarkets within a particular asset class. Some of them are more macro level, looking at different trends that are emerging. I'll give you an example. Rent control is a topic that's hot right now in Illinois. It was just passed, or the ban on it was lifted in California, New York, Oregon. So there's some of those things. So what we do is take a look at, well, what does this mean then to the investor? The private party investor, the people that we're talking to here, and what are some of the things that you might think about and position yourself for in light of some of these trends that are going on? Where might there be opportunities? So we do it. We do these research reports across all the asset classes, across almost every major market across the country and Canada. Just for a little more detail, we have over 80 offices throughout the country and Canada. So really, every major metro is a place that we serve, and I just happen to be familiar with Chicago and being based here in Chicago, but we do deals literally everywhere, all throughout the country. The other thing is that our advisory platform and the work that our agents do with those owners, while at the end of the day we want to help buyers and sellers match properties, the majority of our time really is spent in a consulting type of a a venue where we're looking at, how long, what's the hold strategy for this property? What are the long-term implications of a certain lease structure that you're going to put in there? Where might we be able to mitigate the expense load a little bit better and peel things back? So we're constantly in dialogue with our clients, looking at how do we maximize the value. Is really it. Whenever you decide to exit, and whenever you decide to essentially take your chips off the table, what are you doing to position the property and position the building in the most favorable light? And then that also ties into our research offerings and the debt that you can get on the property and so forth. So there's a ton of information for people that might be curious about it, just to get a better sense of maybe different asset classes and some of the factors that are going into these different things. I think that people may be surprised that the price point that you can get into for some of these deals. I mean, we have properties, just things that come to mind. We sell a lot of single-tenant net lease properties, which basically means that the tenant is responsible for all the maintenance, all the upkeep, all the repairs, on the real estate itself. And it really behaves almost like a bond, and that you get a fixed monthly income in your rent check, and all of the other responsibilities are delegated to the tenant. And it's like, well, why would the tenant do that? I'm thinking about Walgreens or Burger King or Dollar General is one that a lot of our investors like. Big companies who's in the business of making money through their business, and they want to make sure that the buildings that they operate out of are maintained the way that they want to operate out of them. But an investor is the one that actually owns that real estate and collects a rent check from them every single month. Right. So there are deals, plenty of, with a relatively small price point, the $300,000, $400,000, $500,000. Somebody can get into it with a down payment of $100,000. I mean, $100,000, $200,000. That's real money. That's significant money. But it's not all the skyscrapers in downtown Chicago that cost hundreds of millions of dollars. I mean, there's the investment opportunities up and down the board, and each of them have different risks associated with it. I know that we've talked about the management of housing, apartment units or single families, and some of the risks and challenges that go into that. They all have those sorts of things, but like you said, Gary, if you know how to deal with it and you're set up to meet those challenges, they can be really, really profitable investments. Yeah, I agree. Well, I'll tell you what, we're getting close here. How can folks get a hold of you or your office? For people listening, I'm sure they're now intrigued about looking into investing in a Chicago area. So what's the best way for them to reach out to you? And if you could share that, that'd be great. And then we'll go ahead and wrap this one up. Sure. A few ways to do it. You can go on to our website is one way, and you can make an inquiry directly on there. There's a number of properties that we have available for sale. There's a contact us section. All of those inquiries get forwarded on to the appropriate office. So if you're interested in talking to somebody in Florida or wherever you might be, or you're interested in more information there, by all means, that might be a good way to do it, and they can put you in touch with the appropriate agent that can help you there. Can reach out to me directly. My email address is david.bradley@marcusmillichap.com. More than happy to have any of those conversations and see how we might be able to help. You can call my office directly, and that number is 312-327-5400. And we would be happy to chat and again see what we can do for you. Well, that sounds awesome. And Dave, I think I speak for a lot of people, and I say thanks from the bottom of our hearts for sharing your precious. I know you're a busy guy. I mean, that's a major office you're running there, and I appreciate you sharing your wisdom. You're just such a down to earth guy. So thank you, and everybody listening. Thank you for listening. If you haven't subscribed yet, please do so when you're ready. Real estate investing for professional men and women, and also go to the website myinvestmentservices.com and sign yourself up to be a member. Click on the members area and follow the directions there, and participate with networking, joint ventures. I mean, people will support you. And now you know how to have one of the
best and largest investment firms in the country support you too, in U.S. and Canada both, by the way. So thanks, everybody. God bless you and your families, and we will see you next week.
Thanks for listening to this episode of Real Estate Investing for Professional Men and Women. Be sure to go to myinvestmentservices.com to join our community and start building wealth today.